And finally, let us look at part E, where we will be focusing on the causes of market failure and the policies to address market failure. E1. With the aid of a diagram, explain 2 reasons why the market may fail in the case of sugar-sweetened beverages. So in this case, students need to give 2 reasons for market failure, but only one diagram. Given this, the students therefore should know that one of the reasons must be explained using a diagram, but the second reason needs to be explained, but without the use of a diagram. So, for one reason, therefore, where the diagram is used, it will be 4 marks, and the other reason where the diagram is not used will be 2 marks. So, the first reason for why the market may fail in the case of sugar-sweetened beverages is the presence of negative externalities in consumption. Now, as this is what I'm going to use the diagram to explain. So this will be my 4-mark section. So I should be looking at all the aspects of fat sort as far as possible, all right, and use the diagram to explain these aspects. So one, I will combine my explanation of free market equilibrium and the socially optimal equilibrium for the first mark. Driven by self-interest, consumers consume at QF. So this is the point where the marginal private cost of the consumer and the marginal private benefit of the consumer are equal, where their net private benefit is maximized. But the socially optimal level of output occurs where MSC is equals to MSB, where society's welfare is maximized, and this occurs at QS. So this will be for the first mark. Then I move on to explain the divergence between MPC and MSC with evidence. So the presence of MEC causes a divergence between the MPC and MSC, where the MSC, the marginal social cost, is higher than the marginal private cost at all levels of output. So this is because the marginal social cost is a sum of the marginal private cost and the marginal external cost. So therefore, it will be higher than the marginal private cost. So evidence of the presence of external cost is given by the statement in the extract 4 that states that consumption of sugar-sweetened beverages may result in heightened healthcare expenditure and foregone productivity of the workforce. And this may affect employers, the firms who are third parties. Okay, so in your recognition of the marginal external cost, you must clearly state who the third party is. And secondly, you must clearly state what is the loss that is experienced by them. So in this case, due to the higher cost that they may incur due to healthcare expenditure, maybe they need to pay more for healthcare insurance for their employees, and the loss in productivity of the workforce, meaning that the output per worker may actually fall, and all these can affect the profits of the employer. So they adversely affect the profit. So that is the loss or the cost that is experienced by the employers who are the third parties. So you must very, very clearly identify who the third party is and what is the cost that they are experiencing in order to explain the marginal external cost well. Okay, so as a result of this divergence, there is overconsumption of sugar-sweetened beverages of QSQF, and this results in a deadweight loss given by the shaded triangle in diagram in figure 4. So therefore, there is market failure. So as seen in the explanation, students should draw and label the diagram well, and they must use the information in the diagram to explain. So there must be constant referencing to the diagram in their explanations. The second reason for why the market may fail in the case of sugar sweetened beverages is due to the presence of imperfect information. And this is mainly to myopic decision making, where consumers tend to consider the short-term costs that may be associated with consuming sugar sweetened beverages without considering the long-term health issues that may occur due to the consumption of these sugar sweetened beverages. So for the first mark, students would need to talk about the undervaluation of MPC using evidence from the extract. So given that consumers would have inaccurate perceptions of the possible health effects that consuming sugar-sweetened beverages may have on them, they would underestimate their MPC. So therefore, the marginal private costs perceived by them would be lower than the marginal private costs that they would actually incur as a result of consuming these sugar-sweetened beverages. Therefore, they would tend to over-consume sugar-sweetened beverages, giving rise to deadweight loss to society. The overconsumption and the deadweight loss would mean that the market will fail to allocate resources efficiently in the case of sugar-sweetened beverages. We now come to the final question, E2. Discuss whether the imposition of a sugar tax may be the best policy to deal with market failure in the sugar-sweetened beverages market. So let's do the CCCA that we normally do for essay questions to try to understand what the requirements of this question are. Firstly, let's look at the command phrase. In this case, it's discuss whether. So discuss whether would require you to consider different perspectives to finally come to a well-reasoned conclusion with regards to whether tax may be the best policy to deal with market failure in this market. For content, you will need to look at sugar tax and how the sugar tax, which is an indirect tax, may be used to deal with market failure in the market for sugar-sweetened beverages. At the same time, you need to consider the best policy. So in order to determine whether sugar tax is the best policy, there's a need for you to compare sugar tax with one other policy that may help to solve market failure associated with in the sugar-sweetened beverages market. Next, the context in this case is the market for sugar-sweetened beverages. Next, we move on to look at the approach for this question, which is basically an outline of what you would include in this answer. So you would need to have an introduction that basically provides a context to this question. So as this question is essentially on sugar taxes, you will need to define what indirect taxes may be and provide an overview to your response to this question. As this is a higher order question that has a claim in it, the claim in this case being that imposition of a sugar tax may be the best policy to deal with market failure in the market for sugar-sweetened beverages. So this requires you to make use of what is called a TAS approach. The TAS approach basically requires you to have a thesis, and the thesis basically would support the claim in the question. An antithesis, which will basically go against the claim in the question. And finally, a synthesis. And this synthesis would basically weigh and justify whether sugar tax is indeed the best policy to deal with market failure in the market for sugar-sweetened beverages. So in the thesis, you would need to explain how a sugar tax may work to resolve market failure in this market. You may also include one advantage of using a sugar tax, but this is optional since this is only an 8-mark question. In the antithesis, you may want to consider why tax may not be a good policy by looking at 2 limitations to the use of indirect taxes in the market for sugar-sweetened beverages. The second antithesis will present an alternative policy, one more policy that could be used to deal with market failure in the sugar-sweetened beverages market. So in this case, I will be looking at public education as the alternative policy. So in my antithesis 2, I will need to explain how public education may be used to address the market failure in this market, plus perhaps one advantage if time permits, but definitely 2 disadvantages to public education. And finally, in my synthesis, I need to provide a stand. This stand will basically consider whether sugar tax is actually indeed the best policy to deal with market failure. I will substantiate this stand by providing evidences as to why a sugar tax may or may not be the best policy, depending on the stand that I have taken. And finally, I may provide something special, for example, a recommendation as to what would be, therefore, the best way to deal with market failure in the sugar-sweetened beverage market. Let us look at the suggested answer to this question. So we begin as usual with an introduction, and in the introduction we define what is an indirect tax. An indirect tax is a tax that is levied on goods and services. This is a market-oriented tool, and many governments use this tool to deal with market failure in specific markets. Then we go on to provide an overview. So in this case, we are going to evaluate if sugar tax is indeed the best policy by comparing criteria such as effectiveness, immediacy, and feasibility. Please note that you can use any other criteria from FEAST. So in this case, we are going to compare these criteria relating to tax with that of public education, which is the second policy that we are going to look at in this case to consider if tax is the best policy. Let us now begin with looking at the body paragraphs in this question. So first, let's look at the thesis. And the thesis would support the claim in the question that sugar tax is a good policy to deal with the market failure in the sugar-sweetened beverages market. So first we begin with a topic sentence or the point that a sugar tax can help reduce overconsumption of sugar-sweetened beverages. Then we move on to the analysis, which is the elaboration. So in the elaboration, we start off by stating that there is overconsumption of sugar-sweetened beverages at the free market equilibrium, which is at QF, where MPB is equal to MPC, which prompts the government to impose a tax in this market. When a tax that is exactly equal to the MEC at QS is imposed, this would force consumers to internalize the negative externality that they are causing by raising the MPC up from MPC to MPC star. This increase in MPC from MPC to MPC star results in an increase in equilibrium price from P1 to P3. And with this increase in price, quantity demanded by consumers of sugar-sweetened beverages would decrease towards QS. So you will have a movement along the demand curve as a result of the higher price. So this will cause consumers now to maximize their net private benefit at the point where MPC star is equal to MPB. And this coincides with QS, which is the socially optimal level of output. So as a result of this indirect sugar tax, this reduces the consumption of sugar-sweetened beverages to the socially optimal level of QS, which eliminates the deadweight loss on society, and this helps to correct the market failure prevailing in the market for sugar-sweetened beverages. Now, let us look at antithesis 1. In antithesis 1, we will explain that a tax may not be a good policy because there are limitations that may reduce the effectiveness of the policy in achieving QS. The first point is on effectiveness. The consumption of sugar-sweetened beverages are often habitual, with consumers being addicted to its consumption. Therefore, in the eyes of the consumer, there is a high degree of necessity for the good, resulting in the demand for sugar-sweetened beverages being price inelastic. As such, to reduce the quantity to the socially optimal level, a very large tax would be required. But this may lead to political unpopularity. So governments may be reluctant to impose a very large tax. So therefore, the tax that is imposed, which will be relatively small, will lead to a less than proportionate decrease in quantity demanded and therefore may not achieve the socially optimal level of QS, rendering the policy ineffective. Secondly, there may be problems associated with the feasibility of the policy. For the policy to be feasible, the government needs to know the exact monetary value of the marginal external cost at QS in order to impose the correct level of tax. However, often the governments have imperfect information and therefore are unable to tax correctly. So this may result in the government either over or under taxing. As a result, QS will not be achieved and therefore the policy will not be effective in reducing the quantity of sugar-sweetened beverages to the socially optimal level, and therefore it is ineffective in addressing the market failure in the market. Thirdly, taxation, while it addresses the negative externalities prevailing in the market, it does not deal with the root problem of imperfect information. So therefore, while it may be necessary, it may not be sufficient to deal with the market failure prevailing in the market for sugar-sweetened beverages. Next, we move on to antithesis 2, where we present an alternative policy that can be used by the government to address the market failure in the market for sugar-sweetened beverages. So first, we give the topic sentence or the point. Public education also addresses the market failure in the market for sugar-sweetened beverages by educating consumers on the adverse effect of these drinks on them. So we move on to the analysis. So we extract evidence and elaborate on how public education works to correct the market failure. So public education may come in the form of campaigns and advertisements that will highlight potential health and productivity issues that can arise to consumers due to consuming too much of sugar-sweetened beverages. So an example that is given in this case is in extract 4, in which it is stated that Ministry of Health has included color-coded labels to give consumers information on the sugar content to help consumers make more informed choices on the choice of drinks that they consume. So as a result of these color-coded labels, this will result in a fall in the demand for sugar-sweetened beverages. So the fall in demand for sugar-sweetened beverages is represented by a fall in the marginal private benefit curve from MPB to MPB perceived. So as a result of this fall in demand, and therefore a fall in MPB from MPB to MPB perceived, this results in the new equilibrium being achieved where MPC perceived is equals to MPB perceived at QS. So as a result of this, the socially optimal level of output is achieved at QS, dead weight loss is eliminated, and the market failure is corrected. Next, we will look at the limitations of public education. We need to look at the limitations in order for us to be able to compare if sugar tax is a better policy compared to public education, and therefore the best policy to deal with market failure in the market for sugar-sweetened beverages. So what are these limitations of public education? Firstly, we look at it in terms of effectiveness. The effectiveness of public education is dependent on the receptiveness of consumers. This is because this policy requires consumers to absorb the information that has been provided and voluntarily change their behavior. If consumers are not receptive to the information provided, the policy will be ineffective in achieving QS, and therefore the market failure will not be solved in the market for sugar-sweetened beverages. Next, we look at time lag. In the case of public education, there may be a very long impact lag because habits and mindsets take time to change. So as a result, this policy may only see some effectiveness in the very long term, by which time the problem of overconsumption may have worsened in the market. So therefore, the effectiveness of this policy is also limited in the short run. Next, feasibility. Public education efforts incur high costs on the government, and this may result in opportunity costs in terms of other objectives that are foregone, as well as a burden on the budget of the government. The government, given that it has a fixed budget, may have to cut spending on other areas such as infrastructure in order to fund the public education efforts. And this may slow down economic growth in the country in the short run. Finally, we come to the conclusion. And in this conclusion, we need to synthesize the arguments that we have presented in the body paragraphs to determine whether the imposition of the sugar tax may indeed be the best policy to deal with the market failure in the sugar-sweetened beverages market. So in this case, I'm going to take the stand that a sugar tax may be the best policy in the short run. So I have now giving a condition short run here, which means that I'm going to be looking at time. So I'm going to substantiate my stand by looking at time. So I'm going to play up the fact that sugar taxes have shorter implementation and impact lags compared to public education. And this will help to solve the problem more effectively immediately in the short run. So I play down public education, where I say that public education relies heavily on receptiveness of the consumers, and the receptiveness depends very much on how quickly they can change their habits. And often, habits take time to change, and therefore, this policy will only be successful in the long run because it takes more time for the impact to be felt. Finally, I can also provide something special, a recommendation. I can recommend that a combination of sugar tax and public education may be best because this can help address both short run and long run situations. And it also helps to address both sources of market failure, both negative externalities and imperfect information. The taxes will help to mitigate the problem and prevent it from worsening, while in the long run, the public education will help change spending habits, consumption habits of the consumers to help resolve market failure. In addition to this, the tax revenue that is earned through the taxation policy, through the sugar tax, can be helped to can be used to fund the public education efforts. And this will mean that the government does not need to cut expenses in other areas in the economy in order to fund this public education efforts. So it will help to reduce the opportunity costs that may be faced by the government in funding public education efforts in order to deal with the market failure in the sugar sweetened beverages market. Okay, with this, we have come to the end of this question. Please do take time to re-watch those sections of the question that you are not sure of. Thank you.